Very, very good morning to all of my friends. Welcome back. I hope you guys are doing good. And further, I expect that you guys have solved all the questions relating to material and labor variances. If you guys have any doubts in this part, what I have discussed till now, you guys can please post your queries, whatever the queries you have relating to standard costing, material and labor variance. So waiting for your queries first. Else we'll start directly with fixed and variable overhead. So fine, let's start with fixed overheads. Now see, whenever you find a question on fixed overhead variances, try to arrange it in a format that is budget and actual. In most of the cases, the question will be given in this format only, but still, let's say the word problem is given. So try to convert it into this format that is budget and actual. So let's say the days are given, the budgeted days are 25 and actual days are 26. Further, when talking about hours, the details of hours are also given. That is, the budgeted hours are my 30,000 and actual hours are my 33,000. Further, units are also given. 30,000 and 32,500. And let's say fixed overheads are given. That is 45,000 and 50,000. So this much data is given in the question, and with the help of this data, we have to calculate the relevant variances. So let's start with fixed overhead variances. So the first thing what we will calculate is fixed overheads cost variance. Fixed overhead cost variance. Now this variance, when talking about this variance, it talks about under or over absorption of overhead. It talks about under or over absorption of overheads. So let's calculate the absorption rate first, then calculate the absorbed overhead, and then we will compare it with actual overheads to get under or over absorption of overhead. The same way. So how to calculate absorption rate? 45,000 divided by 30,000. So 1.5 per unit will be my absorption rate. So 45,000 overheads for 30,000 units. So we will get our absorption rate, that is 1.5. We will apply it to actual units. So into 32,500 unit, we'll get the absorbed overheads. So 45,000 for 30,000 units. So 1.5 is the rate into 32,500. So 48,750 are my absorbed overheads. minus my actual overheads are 50,000. So my absorbed overheads are 48,750 and my actual overheads are 50,000. So 1250 extra, we call it as adverse. Can anyone tell me it is under absorption or over absorption? Waiting for your answers. My absorbed overheads are 48,750 and my actual overheads are 50,000. So it is under absorption or over absorption. Waiting for your answers, guys. Yes, Mr. Om Krishna Gupta, Kiran Bala. So I've got answer from Swati, Om Krishna Gupta. I think still you guys are not thorough with the concepts of overhead. Rest all waiting for your answers. Shesh, Manish, Kiran, Kavita, Srinivasan, Sunil. You guys have to simply mention it is under absorption or over absorption. Waiting for your answers, guys. Those who have joined our portal, you guys can also post your answers. Anyways, since my absorbed overheads are less, so it is under absorption. Herein, my absorbed overheads are less than actual overheads, so it is under absorption. So herein, my overheads were expected at 48,750. However, my actual overheads are 50,000. So 1250 extra. So that's why we can call it as adverse. Now, two part. First one is fixed overhead. Expenditure variance. Now, when talking about fixed overhead, it remains fixed at all the level of production. Fixed overhead remains fixed at all the level of production. So my budgeted overheads were how much? 45,000. My actual overheads are how much? 50,000. So how much is the expenditure variance? We can say 5,000 adverse for the company. So straight away, budgeted overheads minus actual overheads, since fixed overhead remain fixed at all the level of production. So here and when talking about the overall expenditure variance in respect of fixed overhead, it will be budgeted fixed overhead minus actual fixed overhead. So we estimated an overheads of 45,000. However, my actual overheads were 50,000. So 5,000 extra overheads. So we call it as adverse for the company. Now next is fixed overheads volume variance. When talking about volume, they talk about units. When talking about volume, this variance talks about units. So herein, I targeted a production of 30,000 units only. I targeted a production of 30,000 units only. However, my actual production was 32,500 units. I set up a target that I'll manufacture 30,000 units. However, my actual production exceeds my budgeted production by 2,500 units. It's a good sign for the company. Since it is units, so we'll be taking the rate per unit. And from here on, the difference between budget and actual is already considered at fixed overhead expenditure variance. So herein from now and onwards, since we are calculating the variance because of change in units, so we'll be taking the standard rates only. So since it is units, so we will multiply it by rate per unit. So that is 45,000 divided by 30,000 unit. So this will be 1.5 per unit. How come this 1.5? 45,000 rupees divided by 30,000 units. Since we have calculated the units, this volume variance always talks about units. That is the units manufactured, that is the budgeted units manufactured and the actual units manufactured. So herein, this is what my volume variance, that is 3750 favorable. Very important, it is favorable. because my actual production is much more than my expected production. So it's a good sign for the company. So that's why it will be favorable. If you guys have any doubts till now, you guys can please post your queries. Now let's start with other variances. Now first one is fixed overhead. Calendar variance. Fixed overhead calendar variance. When talking about calendar variance, it talks about days. So let's start with calendar variance. So the company set up the target that we will work only for 25 days. The company set up the target that in a month we will work only for 25 days. But actually we worked for 26 days. 1 day extra we worked. Forget about efficiency. I'm just talking about, just think from days perspective that we set up a target that we will work for 25 days in a month. But my workers did a great job and they worked for 26 days in a month. That is 1 day extra they worked. So we can say 25 days we were supposed to work, but we actually worked for 26 days. That is 1 day extra we worked. Since it is the day, so we'll be taking the rate per day. So 45,000 divided by 25, 45,000 rupees divided by 25 days. So we will get the rate per day. That is 1800 rupees per day. So this will be 1800 favorable. Very important, this variance is favorable. Forget about efficiency, guys. Very good, Swati. So forget about efficiency. Just think from days perspective. Very simple, guys. That is, we were supposed to work for only 25 days in a month. But we actually work for 26 days. That is 1 day extra we work. So it's a good sign for the company. Again, I repeat, forget about efficiency or inefficiency. Just think from days perspective that 25 दिन आपको काम करना था, आपने 26 दिन काम किया. That is 1 day extra you worked for the company. So it's a good sign for the company. That's why it is favorable. Now next is capacity variance. When talking about capacity variance, it talks about hours. When talking about volume, it talks about units. When talking about calendar, it talks about days. When talking about capacity variance, it talks about hours. So herein, straight away, we cannot say that we have the capacity to work for 30,000 hours, but we work for 33,000 hours. By agar hours bade, so very important, guys, do make a note of it, that the days are also increasing. So this statement is incorrect. That is, since the number of days are not equal, see, the budgeted days are 25, actual days are 26. So we cannot simply calculate the variance using hours only. We can't say that we have the capacity for 30,000 hours, we work for 33,000 hours. This statement is incorrect. Now see how to calculate capacity variance since the days are not same. So I'm writing it for your reference. You can directly solve the question, but yes, sometimes, students find it difficult that whether this variance is adverse or favorable. So I'm just writing the complete language that what is I mean, what all I'm explaining, so that you can write it down, and while revising, you can understand that why it is favorable, why it is adverse. So very simple, guys. See, herein we can say that we have the capacity to work for how many hours? Not 30,000 hours. See, 30,000 hours in 25 days. So in 26 days, it means we have the capacity to work for 31,200 hours. That is 30,000 divided by 25 into 26. So we have the capacity to work for 31,200 hours in 26 days. However, we worked for 32,500 hours. That is 1,300 hours above our capacity. So it's a good sign for the company. So it will be favorable. So 1,300 hours into the rate per hour. Since here we are calculating units, here we are using days, here we are using hours, so we'll be taking the rate per hour. So 45,000 divided by 30,000 hours, that is 1.5 per hour. How come 1.5? 45,000 rupees divided by 30,000 hours. So this will be 1950 favorable. So very important, guys, this point is the key, wherein, see, if number of days are equal, let's say budgeted days are 25 and actual days are also 25, we can directly calculate the capacity variance. Simply, that is budgeted capacity is 30,000, actual capacity is 33,000. It means 3,000 hours we worked above our capacity. So accordingly, we can calculate the variance. But herein the number of days are not equal. The number of days are not equal. The number of days are not equal. So that's why we can say that we have the capacity to work for 31,200 hours in 26 days. However, we work for 32,500 hours in these 26 days. That is 1,300 hours we worked above our capacity. So that's why it's a good sign for the company. So it is favorable. If you guys have any doubts in this explanation, you guys can please post your queries. It's a bit on the trickier side. Sorry, guys. Sorry. It is 33,000 hours. So we can say 1,800 hours above our capacity. So this will be 2,700 favorable. A mistake from my end. Sorry, guys. So we have the capacity to work for 31,200 hours in 26 days. However, in these 26 days, we work for 33,000 hours. That is 1,800 hours above our capacity. So that's why it is favorable for the company. See, as I said, the standard costing is not a part of cost accounting, it's a part of management accounting. So once the actual results are out, we do calculate the variances. So as you said that, sir, initially will not be aware of the actual. So this process starts when the actual data is with us. So anyone having any doubts or queries, why it is favorable, why it is favorable, why it is favorable, why it is adverse, and why it is adverse, you guys can please post your queries. So giving you 2 to 3 minutes time, whatever the queries you have, you guys can please post your queries. Waiting for your queries, guys. Yes, Kavita, Swati, Kiran, Mallu, Manish, Om Krishna Gupta, Sesh, Srinivasan, Sunil Gangadev. Anyone having any doubts? Mr. Yash, any doubts? Sir, in fixed overhead calendar variance, how to calculate 1800 per day? So very simple. See, since we have calculated the days, that is one day. So since we have calculated the number of days, so we'll be taking the rate per day. So 45,000 divided by 25 days. So this is how I got 1800 per day. I'll be calculating the efficiency variance separately, Kiran. Don't worry. So let's start with fixed overhead efficiency variance. The name itself says that how much efficiently we work. So just going with the simple concept, what we have learned from at the initial stages, 30,000 units were supposed to be completed in 30,000 hours. See, when talking about efficiency, in 99% cases, we compare it with hours. So these 30,000 units should be manufactured in 30,000 hours. The work was supposed to be completed in 30,000 hours. It means what? One unit should not take more than 1 hour. So very simple, guys. As per the budget given by the management, 30,000 units should be manufactured in 30,000 hours. It means one unit should not take more than 1 hour. So actual production was 32,500 units. So actual production was 32,500 units. So it means these units should be manufactured in 32,500 hours only. Since every unit should take maximum 1 hour, so it means 32,500 units should be manufactured in 32,500 hours. However, to manufacture these 32,500 units, we actually took 33,000 hours. So it means the work was supposed to be completed in 32,500 hours only. However, we took 33,000 hours, that is 500 hours extra. So we can call it as our inefficiency. I'll write it separately. So we can call it as 500 hours is what? My inefficiency. I'll write it down. 500 hours is what? My inefficiency. Into the rate per hour, that is 1.5 per hour. So this will be 750 adverse. So very simple efficiency variance, guys. Very simple efficiency variance. 30,000 units should be manufactured in 30,000 hours. So it means one unit should not take more than 1 hour. So actual production is 32,500 units. It means the work is supposed to be completed in 32,500 hours only. But yes, to manufacture these 32,500 units, we actually took 33,000 hours. That is 500 hours extra we took. So it's an inefficiency for the company. So that's why it is adverse for the company. Kiran Bala, hopefully your query is resolved. Yes, Kiran, any doubts? Mr. Srinivas, hopefully your query is resolved. Kiran, any other doubts? Kiran, I repeat again, when talking about capacity, it straight away talks about hours, that how much is our capacity and how much hours we work. So we have the capacity to work for 31,200 hours in 26 days. That is 30,000 hours in 25 days. So in 26 days, we have the capacity to work for 31,200 hours. But in these but in these 26 days, we work for 33,000 hours. That is 1,800 hours we worked above our capacity. So that's why it is favorable for the company. And when talking about efficiency, I have already discussed. So giving you 5 minutes time to copy, plus whatever the queries you have, you guys can please post your queries, because I'll be giving you a question now to solve in the live session for better idea that you guys are thorough with the concepts or not. So first I'm giving you time to copy, and thereafter a further whatever the queries you have, you guys can please post your queries. This is the easiest way to learn fixed overheads. Again, guys, don't rely on formulas. Agar straight away question aaya, to you can apply formulas. But yes, if the question is on the trickier side, you won't be able to apply formula. So try to memorize the concept. So just refreshing it again. When talking about fixed overhead cost variance, it talks about under or over absorption. So 45,000 overheads for 30,000 units. So for 32,500 units, how much? 48,750. However, actual overheads are 50,000. That is 1,250 extra. So bad for the company. That's why it is adverse. Two parts, expenditure and volume. When talking about expenditure variance, since fixed overhead remain constant at all the level of production, so straight away we will calculate expenditure variance. That is 45,000 minus 50,000. So this is 5,000 adverse. Now when talking about volume variance, the name itself says volume. Volume means what? Units. So the company has set up the target that will manufacture only 30,000 units. However, my actual production exceeds my budgeted production. That is, we manufactured 2,500 units extra. 2,500 units extra into the standard rate. So now, since we have got the units, so we will take the rate per unit. So 45,000 divided by 30,000 units. So we will get the rate per unit, that is 1.5. So 3,750 favorable. Now see guys, expenditure plus volume will be my cost. So 5,000 adverse, 3,750 favorable, so 1,250 adverse. Now three parts, the most important parts, calendar, capacity and efficiency. When talking about calendar variance, it talks about days, that is the number of days. So we were supposed to work for 25 days in a month, but we actually work for 26 days. 1 day extra we work. So it's a good sign for the company. Forget about efficiency. We'll be taking the efficiency variance separately. So 1 day we work more than our capacity. Since it is days, so we will take the rate per day. So this is how I got 1,800 favorable. Now next, capacity variance. It talks about hours. We have the capacity to work for 31,200 hours in 26 days. How come 31,200? 30,000 hours in 25 days. So 26 days, how much? 31,200. Now in these 26 days, we work for 33,000 hours. That is 1,800 hours we worked extra above our capacity. So it's a good sign for the company. Since we have calculated hours, so we'll be taking the rate per hour. So 45,000 divided by 30,000 hours, we will get the rate per hour. That is 1.5. So 2,700 favorable. Now last but not least, most important part, efficiency variance. So 30,000 units should be manufactured in 30,000 hours. It means the work every unit should be manufactured in 1 hour. So 32,500 units should be manufactured in 32,500 hours. However, to manufacture these 32,500 units, we worked for 33,000 hours. That is 500 hours extra we took. So it's a sign of inefficiency. So that's why, since it is hours, so we will take the rate per hour and we'll got 750 adverse. Further, guys, do make a note of it. Calendar plus capacity plus efficiency is volume. So 1,800 favorable, 2,700 favorable. So this will be 4,500 favorable minus 750. minus 750 adverse. So we will get 3750 favorable. So expenditure plus volume is cost. Calendar capacity and efficiency will be volume. So this is all what about the fixed overhead variance. I'll be adding few more points in this part. So as of now, if you guys have any doubts or queries, you guys can please post. Else I'll be giving you a question in the live session and I want you guys to solve this question. So just giving you 5 minutes time to post your query. Further, yes, guys, do write everything. When talking about concepts, when I'm discussing the concept, don't take the screenshot. Better write it. Because what you will write, you will remember it forever. And trust me, guys, when talking about fixed overhead, see, when I'm teaching, you will feel like everything is so easy. But practically speaking, when you will start solving the question, you will see what sir said. And again, you have to check the recorded lecture. So better when talking about these concepts, do make a note of it. Further, what you have understood, what you have understood from my explanation, also write your comment. Make it a habit to memorize the concept. Write your comments that this is what sir said and this is what I understood. So it will help you a lot while revising for the exams. And generally students they do memorize the formula, try to apply these formulas. Further, since there are so many formulas, few students skip this chapter also. Trust me, guys, it's the easiest chapter of the syllabus if you try to memorize the concept. So do copy everything, giving you 5 to 7 minutes time. Whatever the queries, whatever running in your mind, you guys can please post your queries. Thereafter, I'll be putting up a question in front of you. So I want you guys to solve the question. So right now, you guys can ask me, but thereafter, I'll ask you a question. So giving you 5 minutes time, waiting for your queries. I've already explained, Mr. Mallu, everything in detail. Which variance you want me to explain? See, Mr. Mallu, again, when talking about capacity variance, very simple. See, if the days are same, see, if it is budgeted days are 25 and actual days are 25, we can directly calculate capacity variance. That is, we have the capacity of 30,000 hours. We actually work for 33,000 hours. That is 3,000 hours above my capacity, so favorable. But herein, the days are not same. So we have to give the effect of days also. So we will say that 30,000 hours in 25 days. So in 26 days, my capacity is 31,200 hours. So in 26 days, I have the capacity to work for 31,200 hours. But in these 26 days, we work for how many hours? 33,000 hours. It means 1,800 hours I worked above my capacity. So it's a good sign for the company. Into the rate per hour, that is 1.5, will get 2,700 favorable. Kiran Bala, any doubt? Swati, any doubt? Do write your comments also that what you have understood from these concepts. So this information is given wherein 25 and 27 days, 60,000 hours and 70,000 hours. So budgeted days are 25, actual days are 27. Hours are 60,000 and actual hours are 70,000. Further, the units are 45,000 and 48,000. And the fixed overheads are 1 lakh 80,000 and 2 lakh. So waiting for your answer, you are required to calculate all the variances. That's great, Swati. So waiting for your answers now. I have given you enough of time to post your query now. Every one of you guys who are live, I request you guys to please post your answers. With cost variance, expenditure variance, volume variance, calendar variance, capacity variance, and efficiency variance. So waiting for your answers, guys. Waiting for your answers, guys. Yes, Kiran, post the remaining answers. Rest all waiting for your answers. Still, I have not received answers from you guys. Yes, Kiran, Swati, Kavita, Mallu, Yash, Om Krishna Gupta, Srinivasan, waiting for your answers, guys. So I've got answer from Om Krishna Gupta. Very good, Om Krishnan. I've got answer from Yash also. Very good, Yash. Rest all. Yes, Kiran, post all the answers. Okay, so I've got answer from Swati now. And your answers are matching. Very good, Swati, Yash, and Om Krishna Gupta. Yes, Mr. Mallu, Mr. Srinivasan, Mr. Manish. So Om Krishna Gupta has posted all the answers. Rest all waiting for your answers, guys. Quick, everyone. Yes, Kiran, waiting for your answer. Last 2 minutes now. Mallu Jadar, please recheck your answer. Your volume variance, I think it is incorrect. Further, do post the answers relating to cost variance, calendar variance, efficiency variance, capacity variance. What are your answers, Kiran, for volume and cost? So solving it for your reference again now. 1,80,000 overheads for 45,000 units. So for 48,000 units, how much? 1,92,000. And my actual overheads are 2 lakh. So this will be 8,000 adverse. Cost variance straight away 1,80,000 minus 2 lakh 20,000 adverse. Volume, we were supposed to manufacture 45,000 units, but we manufactured 48,000 units. That is 3,000 units extra we manufactured into the rate per unit. So 180 divided by 45, so this will be 4. So this will be 12,000 favorable. So 12,000 favorable, 20,000 adverse, we will get 8,000 adverse. So the cost variance is 8,000 adverse. Very good, Swati. I think all your answers are correct. So Yash, Swati and Om Krishna Gupta, all your answers are correct. Kiran Bala, I think you have posted the correct answer. Mallu, please check your answers. Further, when talking about calendar variance, the budgeted days are 25, actual days are 27. So 2 days extra into the rate per day. So this will be 1,80,000 divided by 25. So this will be 7,200. So this will be 14,400 favorable. Further, when talking about capacity also, 60,000 hours in 25 days. So in 27 days, how much? 64,800 hours. But we worked for how many hours? 70,000 hours. That is 5,200 hours extra we worked above our capacity into the rate per hour. So this will be 3. So this will be 15,600. Now further, when talking about efficiency, 45,000 units in 60,000 hours. It means one unit will take how much hours? 1.3333 hours. So for 48,000 units, how much hours? So 60,000 hours for 45,000 units. So for 48,000 units, how much hours? 64,000 hours. So these 48,000 units should be completed in 64,000 hours. But we actually took 70,000 hours. So 6,000 hours is my inefficiency into the rate per hour, that is 3. So this will be 18,000 adverse. If you guys have any doubts or queries, you guys can please post. Very good. Yash, all your answers are correct. Swati, very good. All your answers are correct. Om Krishna Gupta, very good. All your answers are correct. Those who want to copy this explanation can please copy, giving you 2 minutes time. Now let's get back to the same question. However, the days are not given in the question. The same question where in hours are given, that is 30,000 and 33,000. Units are given, that is 30,000 and 32,500. and 45,000 and 50,000. Let's say days are not given. So very important, guys. When talking about fixed overhead cost variance, it will remain same. No change in fixed overhead cost variance. That is 45,000 overheads for 30,000 units. So for 32,500 units, how much? 48,750 minus my actual overheads are 50,000. So this will be 1,250 adverse. When talking about expenditure variance, same again, no change, 45,000 minus 50,000. So it is 5,000 adverse. So cost variance, no change. Expenditure variance, no change. Again, volume variance also no change. Volume variance also no change. That is, we were supposed to manufacture 30,000 units. However, we actually manufactured 32,500 units. That is 2,500 units extra into the rate per unit, that is 1.5 per unit. So this will be 3,750 favorable. So till now, there will be no change. Now, guys, very important, guys. The calendar variance will not be calculated since days are not given. So calendar variance we can't calculate since days are not given. So we'll directly calculate fixed overhead capacity variance. And since days are not given, so we will assume that the days, budgeted days and actual days are same. So straight away, our capacity was 30,000 hours. We worked for 33,000 hours. That is 3,000 hours above my capacity into the rate per hour, that is 45,000 divided by 30,000, that is 1.5 per hour. So this will be 4,500 favorable since we worked above our capacity. Further, when talking about efficiency variance, again no change. 32,500 units should be manufactured in 32,500 hours, but we took 33,000 hours. So 500 hours is my inefficiency into the rate per hour, that is 1.5. So we will get 750 adverse. Again, 4,500 favorable minus 750 adverse, we will get 3,750 favorable. And 3,750 favorable, 5,000 adverse, we will get 1,250 adverse. So if you guys have any doubts in this part, you guys can please post your queries. If the days are not given, then the calendar variance will not be calculated. Further, there will be a change in capacity variance also. I request you guys to please copy this explanation. Waiting for further. If you guys have any query, you guys can please post your queries. Now let's take a situation wherein hours are not given but days are given. Hours are not given but the days are given. So herein, when talking about cost variance, there will be no change. When talking about expenditure variance, again no change. When talking about volume variance also, there will be no change. Now herein, we will calculate the calendar variance. So very simple, 1 day into the rate per day, that is 1,800 rupees. So this will be 1,800 favorable. Now, since the hours are not given, so we can't calculate capacity variance. But yes, we will calculate efficiency variance. Using days, using the number of days. See, 30,000 units, 25 days. So in 26 days, how many units we were supposed to manufacture? 31,200 units. Herein, since the hours are not given, so we will be calculating the efficiency variance using the days. So herein, 30,000 units, 25 days. So in 26 days, how many units we were supposed to manufacture? 31,200. But in these 26 days, how many units we manufactured? 32,500 units. मतलब 26 डेज में आपको 31,200 यूनिट्स मैन्युफैक्चर करना था, बट वी एक्चुअली मैन्युफैक्चर्ड 32,500 यूनिट्स. इट मींस माय वर्कर वर्कड एफिशिएंटली. दैट इज बाय हाउ मच? 1,300 units into, since we have calculated the units, so we'll be taking the rate per unit, that is 45,000 divided by 30,000, that is 1.5 per unit. So this will be 1,950 favorable. So 1,800 favorable plus 1,950 favorable, we will get 3,750 favorable. If you guys have any doubts or queries, you guys can please post your queries. Further, this part is a bit on the trickier side, so I request you guys to please copy this explanation. Giving you 2 minutes time to copy. So this is all what about fixed overhead variances. Anyone having any doubts or queries, you guys can please post your queries. I'm done with fixed overheads. So now we are moving towards the last part of the chapter, that is, we will be investigating now the variable overhead department. See, when talking about variable overheads, three figures are important. Again, same way you have to convert the question in a tabular form wherein budget and actual. Hours are important. Let's say my budgeted hours are 30,000, actual hours are 33,000. Units are important, 30,000 and 32,500. And variable overheads. That is 60,000 and 70,000. Very important, guys. If the days are given in the question of variable overhead variance, also you guys have to ignore. So very important, if the days, the information regarding the days are given, then better ignore it for calculating variable overhead variance. So now, just like fixed overhead, again we'll be calculating variable overhead cost variance. Again, it talks about under or over absorption of overhead. So 60,000 overheads for 30,000 units. So for 32,500 units, how much? 65,000. However, my actual overheads are 70,000. So 5,000 extra, we call it as adverse. So just like fixed overhead, again variable overhead cost variance, 60,000 overheads for 30,000 units. So for 32,500 units, how much? 65,000. Minus the actual overheads are 70,000. So minus 70,000, we will get the cost variance, that is 5,000 adverse. Now here in same fixed overhead, variable overhead expenditure variance. Generally, when talking about fixed overhead remain constant at all the level of production. But yes, variable overhead keeps on changing. So here, when talking about variable overhead expenditure variance, we'll take the R into consideration. We'll say that it changes as per hours. So 60,000 overheads for 30,000 hours. So every hour my variable overheads are rupees 2. Variable overhead are the overheads that keeps on changing in the ratio of production. So here in 60,000 overheads for 30,000 hours. So for 33,000 hours, how much? 66,000. However, my actual overheads are 70,000. That is 4,000 adverse extra. We call it as adverse for the company. So when talking about the new point, that is what we have discussed in variable overhead, that is different from fixed overhead. That is, it changes as per hours. That is, expenditure variance continuously. Expenditure जो है continuously बढ़ता जाता है when the production are increasing, and it reduces when the production is decreasing. So we'll be giving the effect of hours. So accordingly, 60,000 overheads for 30,000 hours. So for 33,000 hours, how much? 66. And my actual overheads are 70,000. So 4,000 extra, we call it as adverse for the company. Now, again, when talking about variable overhead efficiency variance, it is just similar to fixed overhead. See, 30,000 units, how many hours? 30,000 hours. So 1 unit should not take more than 1 hour. So 32,500 units, it should be completed in 32,500 hours. But we took 33,000 hours. So 500 hours same is my inefficiency into the rate per hour. That is 60,000 divided by 30,000. So this will be rupees 2 per hour. So this will be 1,000 adverse. How come 2 per hour? 60,000 rupees divided by 30,000. So 4,000 adverse plus 1,000 adverse, 5,000 adverse. That's it. This is all what about variable overhead. So it's the easiest part of the chapter. When talking about variable overhead variance, only three variants: cost variance, expenditure variance, and efficiency variance. So giving you 3 to 4 minutes time to copy this explanation. In the meanwhile, you guys have any doubts, you guys can please post your queries. No, Yash, we have to consider hours only. When talking about units, we have already calculated the cost variance, that is under or over absorption of overheads. Anyone else? So this is all what about standard costing concepts. I have covered each and every concept in detail. Kavita Kulla sir, in variable overhead extra hours is adverse. So herein, when talking about, when talking about efficiency, again, focus on the language. 30,000 units, 30,000 hours. So one unit should be done in 1 hour. It means 30 to 500 units should be manufactured in 30 to 500 hours. It means 30 to 500 units, 30 to 500 hours में complete हो जाने चाहिए. But we took 33,000 hours. It means 500 hours extra we took. So it is an inefficiency. So that's why this is adverse. Kavita. Any doubt, Kavita? It's not extra hours. We are not talking about capacity. We are talking about efficiency. If it is a capacity, we can say if it is extra, it means we worked above our capacity. So it will be favorable. But efficiency, if we took more hours, then it shows our inefficiency. That's why it is adverse. In expenditure variance, again straight away, 60,000 overheads for 30,000 hours. So for 33,000 hours, कितना खर्चा होना चाहिए था? 66,000. But we actually spent 70,000. That is 4,000 extra. That's why we call it as adverse. Anyone else? So let's summarize what we have discussed till now. When talking about standard costing, it's not a part of cost accounting, it's a part of management accounting, and it assists management in decision making. When the actual data is out, we do apply standard costing. सब कुछ हो जाने के बाद एक्चुअल डेटा जब हमारे पास आता है, then only we can apply standard costing. So we do compare the estimated data with the actual data to calculate variance. So this chapter is also known as variance analysis. Now herein, from examination point of view, we have to calculate the variances on material, labor, fixed overhead and variable overhead. So let's start with variable overhead and then we'll go to material. So variable overhead, first we will calculate the cost variance, that it talks about under or over absorption. So variable overhead on budgeted units multiplied by my actual units, we will get the absorbed overheads, minus actual overhead, we will get the cost variance. Again, when talking about efficiency variance, expenditure variance, we have to give the effect for hours. So budgeted overheads on how many budgeted hours into actual hours minus actual overheads. When talking about efficiency, I have already discussed this part in detail. So this is all what about variable overhead. Very important, efficiency plus expenditure will be my variable overhead cost variance. Now, before this, we discussed fixed overhead. So first we calculate the fixed overhead cost variance on the top. That is budgeted fixed overhead on budgeted units into actual units, we will get the absorbed overheads. If we compare it with actual overheads, if the actual overheads are more, it will be adverse. And if it is less, it will be favorable. When talking about expenditure variance, we can straight away calculate the expenditure variance, that is budgeted fixed overhead minus actual fixed overhead. When talking about volume variance, that is fixed overhead volume variance, it talks about units. कि budgeted कितने यूनिट बनाने चाहिए थे और actually कितने यूनिट बनाए. If we are manufacturing more units, it will be favorable. We have to apply the standard rates. If we are manufacturing less than budgeted units से कम manufacture कर रहे हैं, it will be adverse. Wait, Srinivasan. Further, when talking about the remaining part, calendar variance, it talks about days. So if the budgeted days are less than actual days, so it will be favorable. So if the actual days are more than budgeted days, we call it as favorable for the company. Further, we have to apply the standard rate. Now herein, when talking about capacity, it talks about hours. So herein, if the days are not same, we have to give the effect of the days. And if the actual hours are more than my budgeted hours, or we can say if the actual hours are more than my budgeted hours, so this variance will be favorable because we worked above our capacity. Efficiency variance, it will be similar to the variable overheads. Now let's start with, let's discuss this further. One more thing, calendar variance, efficiency variance, and capacity variance will be equal to volume. Calendar, capacity, and efficiency will be volume, and volume plus expenditure will be my cost variance. Now next, let's summarize the material, the first part. So when talking about the material, the basis of comparison is output. So to compare the budgeted and actual data, the output should be the same. So if it is not same, then we have to prepare revised standard using the output. But if the output is same, then no need to prepare revised standard. When talking about the material variance, first we calculate material cost variance. There it is. I'll be discussing the formulas only, that is standard quantity into standard price minus actual quantity into actual price. Again, two parts of cost variance, price and usage. When talking about price variance, it talks about the work done by the purchase manager. That is, क्या price पे खरीदना चाहिए था, क्या price पे खरीदा into the quantity that is actually purchased. So standard price minus actual price into actual quantity. The next, when talking about uses, again, kitna use hona chahiye tha, kitna use kiya. Again, this represents the work done by the production manager. So we will not be taking the actual price, but we'll be taking the standard price only. So standard quantity minus actual quantity into standard price. Further, when talking about mix variance, क्या mix होना चाहिए था और क्या mix हुआ. So क्या mix होना चाहिए था, we call it as standard mix. क्या हुआ, we call it as actual quantity into the standard price. And when talking about the yield variance, total कितने input में काम होना चाहिए था, कितना input actually किया into the weighted average rate. Alternatively, standard quantity minus standard mix into standard price. Further, when talking about labor variances, again the concepts are same, just like material variance, wherein we'll calculate labor cost variance, labor rate variance instead of price, labor time variance instead of usage, labor mix variance, and labor yield or sub-efficiency variance. Further, very important, yield plus mix will be time plus rate will be my cost. Just like this in material also, yield plus mix will be my usage plus price will be my cost. So this is all what about standard costing, the concepts and all everything. If you guys have any doubts, you guys can please post your query. The detailed report will be submitted, Srinivasan. And further, we do prepare the statement of reconciliation also to calculate the under or over absorbed overheads and whatever it is. I mean, the differences will not be shown in costing P&L. It's just like a diagnostic report ki kahan pe system mein gadbad hai, and accordingly the management take the corrective action. Anyone else with any doubts or queries? Waiting for your queries, guys. We are done with the concept part, theory part of standard costing. So if you guys have any doubts or queries, you guys can please post. Fine. Giving you 15 minutes break time. So whatever the queries you have, you guys can please post your query. Further, if you want me to solve or discuss few questions of study material, I'll discuss few questions of study material also for better understanding of this chapter. So let's take a break of 15 minutes. I'll be back after 15 minutes with the remaining part of the chapter. So Edwin sir, are you there? Edwin sir, are you there? Anyways, let's take a break of 15 minutes. Sir, let's start. Should I continue? Okay. So welcome back, guys. So we are done with all the concepts of standard costing. So whatever the queries you have or whatever the question you want me to discuss, I can discuss these questions for you guys. So whatever the questions you have, you guys can please post your queries. I'll be discussing the questions what you are requesting for. If you guys want me to discuss any questions, I'll be discussing few questions for you guys. So whatever the queries you have or whatever the questions you want me to discuss, you guys can please post. So I'm discussing illustration number 8. From the study material, many students find difficulty in solving illustration number 8. So I'm discussing illustration number 8, page number 13.33 of the study material. So the standard labor employment and the actual labor engaged in a week for a job are as under, wherein the details are given for skilled. I request you guys to please open your study material, page number 13.33. I'm discussing illustration number 8. So the data are given wherein the standard number of workers are given, the actual numbers of workers are given, the standard wage rate per hour is given, not per worker, but the wage rate is given per hour. Actual wage rate per hour is also given, that is 4, 3, and 2. During the 40 hours working week, so a worker work for 40 hours in a week, the gang produce 1800 standard labor hours of work. So herein, in this question, the output is not given in units. It is given that the gang produced 1800 standard labor hours of work. It means the output is given in hours. The output is given in hours rather than units. You are required to calculate the various labor variances. So let's start. So there are three types of worker: skilled, semi-skilled, and unskilled, and hours and rate. So there are total 32 workers and each worker work for 40 hours. So this is 1280. I'm just writing the budgeted data first. Further, 12 workers working for 40 hours. So this will be 480 hours. 6 worker working for 40 hours. So this will be 240. So this will be 2000 hours. And the rate is given, that is 3, 2, and 1. Now let's start with the actual data. 。  . 。 。 . 。 . 。. 。. . 。. . . . . . . . 。 . . . . . . . 。 . . . . . . 。 . . . . . 。 . . . . . 。 . . . . . . . 。 . 。
Now let's start with the actual data now.
When talking about actual, there are total 28 workers of skilled. So this will be 1120 hours. 18 workers of semi-skilled. So 18 into 40. That is 720 hours. And 4 workers unskilled. So 160 hours. Further, when talking about the rate, it is 4, 3, and 2. So this is the budgeted data and actual data given. Now see, actually, even though we worked for 2000 hours, but we were able to produce an output of only 1800 hours. So the output is of only 1800 hours. Herein, when talking about the budgeted data, the output is 2000 hours. But when talking about actual data, even though we work for 2000 hours, but we were able to generate an output of only 1800 hours. So my point is, are these two figures comparable? No, because this budgeted data is given for 2000 hours and actual data is given for 1800 hours. So we have to calculate the revised standard also. So when talking about calculation of standard hours, again same, 1280 hours for 2000 hours of output. So for 1800 hours of output, how much? 1200 hours, sorry, 1280 hours. 1280 hours for 2000 hours of output. So for 1800 hours of output, how much? Similarly, semi-skilled also, 480 hours for 2000 hours of output. So for 1800 hours of output, how much? Similarly, unskilled also, 240 hours for 2000 hours of output. So for 1800 hours of output, how much? Into the rate is same, that is 3, 2, and 1. So this will be 1152. This will be 432. This will be 140. One second, guys. So this will be 216. This will be 864. So 3456 plus 864 plus 2. If you guys have any doubts in this part, you guys can please post your query. Herein, even though we worked for 2000 hours, but we were able, even though we worked for 2000 hours, but we were able to generate an output of only 1800 hours. So that's why these two figures are not comparable, because budgeted data is given for 2000 hours of output and actual data, even though the inputs are 2000 hours, but the actual data is given for 1800 hours of output. If you guys have any doubts till now, you guys can please post your query. Sorry. So now let's start with labor cost variance. Again, guys, do make a note of it. Again, guys, do make a note of it. For material, labor, I'll be using the standard format to solve all the questions. See, in study material, few questions are solved using a different way. Few questions are solved using different way. So I'll be using the same approach for all the questions what I'll be discussing for material and labor. And again, fixed and variable overheads also you can say solve in the similar way what I have discussed. So this, if you present the solution in this way also in exams, you'll get full out of full marks. So when talking about labor cost variance, so standard R into standard rate minus actual R into actual rate. I've already discussed the concept. So 4536 minus 6960. So this will be 2424 adverse. When talking about labor rate variance, again same way, ये रेट होना चाहिए था, ये रेट हुआ into actual hours. So standard rate minus actual rate into actual hours. So 3, 2, and 1. And 4, 3, and 2 into my actual hours, that is 1120, 720, and 160. So this will be 1120 adverse. This will be 720 adverse. And this will be 160 adverse. So this will be 2000 adverse. If you guys have any doubts till now, you guys can please post your queries. Further, the work was supposed to be completed in this time, but we took this time into standard rate. So standard hours minus actual hours into standard rate. Again, these formulas I have already discussed. Again, don't try to memorize the formulas. Very simple. The time it says that the work was supposed to be completed in this time and we took this much of time. So 1152 into 3 into 2 so this will be 96. This will be 96 favorable. This will be 576 adverse. This will be 56 favorable. So this will be 424 adverse. So 2000 adverse plus 424 adverse, we will get 2424 adverse. Now labor mix variance. The name itself says mix. So this 2000 should be in the ratio of 1280, 480 and 240. But the actual ratio of 2000 is this much. So we can directly calculate anyways 1280 divided by 2000 into 2000 will get the same amount. So skilled, semi-skilled and unskilled. See here in the budgeted hour total is also 2000 and actual hour total is also 2000. So we can directly calculate 1280 divided by 2000 into 2000 will get same figures only. So 1280, 480 and 240. This is my standard mix minus actual standard mix minus actual hours into standard rate minus 1120 so this will be 480 favorable. This will be 480 adverse. And this will be 80 favorable. If you guys have any doubts in this part, you guys can please post your query. Now, last is we call it as labor yield variance. We can call it as efficiency also. Overall, the work was supposed this 1800 output we should have completed in 1800 hours. But we took 2000 hours. The same way. So 200 hours extra we took into the weighted average rate that is 4536 divided by 1800. This will be 504 adverse. Again, yield plus mix will be efficiency, efficiency plus rate will be cost. I request you guys to copy this solution. What I can see in the study material that it is presented in a bit different way. So if you guys have any doubts or queries, you guys can please post your query. Further, if you want me to discuss any other question also of your choice, then I can discuss. So waiting for your queries, guys. I request you guys to please copy the solution. Most of the students find difficulty in this question. So that's why I have discussed this question. Again, when talking about labor mix variance, see my actual inputs or actual total hours are how much? 2000. It should be in the ratio of 1280 is to 480 is to 240. If you divide it by in this ratio only, you will get the same amount, that is 1280 480. See, ultimately 2000, my actual total hours are to be in ratio of 1280 is to 480 is to 240. So this should be the ratio. So the final figure will be the same, that is 1280, 480 and 240. So this is what my standard mix. I hope, Manish, your query is resolved. Further, giving you 2 to 3 more minutes time to please copy this explanation. Again, we'll be following the standard procedure, standard way to solve all the question. So let's discuss illustration number 11 of the study material. Again, I'm discussing one more question from the study material, illustration number 11. I request you guys to please open your study material. I'm discussing illustration number 11. Page number 13.44. So let's start with this illustration. A company has a normal capacity of 120 machines working 8 hours per day of 25 days in a month. So there is a company who has a normal capacity of 120 machines working for 8 hours per day of 25 days in a month. So here in the days are given, hours are given. So let's start with this question directly. We will just write down the extracts of the question. So as I said that when you find a question on fixed overhead or variable overhead, we have to present it in this way, budget and actual. So here in the days are given, that is 25 days in a month. So it is given that they are total 120 machines are there which are working for 8 hours in a day and for 25 days in a month. So my budgeted hours will be 24,000. How come 24,000? 120 machine working for 8 hours in a day into 25 days in a month. So we will get 24,000 as my hours. Now the fixed overhead are budgeted at 1,44,000 per month. So my fixed overheads are 1,44,000 per month. That is my budgeted overheads. And further, it is given that the standard time required to manufacture 1 unit of a product is 4 hours. It means 1 unit बनाने में आपको 4 घंटे लगते हैं. So we have 24,000 hours. And 1 unit take how many hours? 4 hours. So we'll be able to manufacture 6,000 units only. Now further, when talking about in April 2021, the company worked for 24 days only. The company worked for 24 days only, with 840 machine hours per day. So 840 are the machine hour. It means what? The data is given in machine into hours. So 840 are my machine hours into 24 days in a month. So we will get the actual hours, that is 20,160. Further, the output is given, that is 5305 units. And the actual fixed overheads are given, that is 1,42,000. So now my master chart is ready. So we can start solving the question. It's a very easy question now. Fixed overhead cost variance. Again, I'll be solving the question using the same way. I'll be not be following any other method. The method what I have discussed, I'll be discussing in the same way. So very simple, guys. Cost variance, 1,44,000 overhead, 6,000 units. So 5305 units. How much are my absorbed overheads? And my actual overheads are 1,42,000. So 14,680 is my under absorption. If you guys have any doubts in this part, you guys can please post your query. Now two parts. 1,44,000 are my budgeted overheads, and my actual overheads are 1,42,000. So this will be 2,000 favorable. Now next is volume variance. We were supposed to manufacture 6,000 units. We actually manufactured 5,305 units only. That is much less than what we expected. So 6,000 we were supposed to manufacture. We manufactured only 5,305 units. That is 695 units less than what I expected. Into the rate per unit, that is 1,44,000 divided by 6,000. So this will be 24 per. So this will be 16,680 adverse. How come this 24 per unit is derived? Very simple. 1,44,000 divided by 6,000 units. You'll get 24 per. 16,680 favorable. Sorry, adverse. 2,000 favorable. So we'll get 14,680 adverse. Anyone having any doubts? You guys can please post your queries. Miss Kavita, the page number is 13.44. Now again, three parts. So let's say fixed overhead calendar variance. Days, 25 days we were supposed to work. We work for only 24 days. 25 days we were supposed to work. We worked only for 24 days. 1 day less into the rate per day, that is 1,44,000 divided by 25. $5,760 adverse. 5,760 adverse. Now next is fixed overhead capacity variance. So 24,000, 2160. We will not compare these two. 24,000 hours in 25 days. So in 24 days, how much is my capacity? 23,040 is my capacity. But I actually work for 2160 only. That is much less than my capacity. So 2,880 hours into, we will take the rate per hour. So that will be 6 per hour. How come 6? Very simple. 1,44,000 divided by 24,000. So 17,280 adverse. So this is also adverse. This is also adverse. Now let's talk about efficiency. 6,000 units are manufactured in 24,000 hours. So 1 unit takes 4 hours. 1 unit takes 4 hours. So my 5,305 units should be manufactured in 21 to 20 hours. But we completed the work in 2160 hours only. So we can say it is an efficiency. It is not inefficiency, it is efficiency. By 1060 hours into the rate per hour, that is 6. So this will be 6360 favorable. So again, calendar plus capacity plus efficiency will be volume. Volume plus expenditure will be cost. If you guys have any doubts or queries, you guys can please post your query. Again, I request you guys to copy the solution. I'm here just using the standard format. The way I discussed, I'll be discussing all the questions. So please copy the explanation. In the meanwhile, if you guys have any doubts or queries, you guys can please post. Waiting for your queries, just giving you 2 to 3 minutes time to copy this explanation, please. Again, in study material, it's solved in some different way. But since I have discussed everything in a similar, as per the particular, I've discussed all these concepts using a particular way. So better try to solve the question in this way only. Om Krishna Gupta, Srinivasan, Sunil Gangadev, Swati, Yash. Do you guys have any doubts or conceptual queries? You guys can please post. Else, if you guys want me to discuss any question, I can discuss this for you guys. There are few missing figure questions also. But to solve these questions, you guys have to be thorough in the concepts. Mr. Yash, again, focus on what I'm saying, that the company set the target that we have to work for 25 days. But my workers worked only for 24 days. That is 1 day less than my target. So that's why we call it as adverse. Again, I repeat, forget about inefficiency. आप inefficiency पे मत जाइए. उसके लिए we have already calculated a separate variance, that is fixed overhead efficiency variance. Just think from day's perspective that you were advised to work for 25 days, but you reported to work only for 24 days. So we can say 1 day it is adverse for the company. The same goes with ours also. That is, we have the capacity to work for 23,040 hours in 24 days. But in these 24 days, we worked for only 20,160 hours. That is less than our capacity. So that's why I have written adverse. So there is a difference between capacity and efficiency and calendar and efficiency. Anyone else? Okay, so I'll guide you how to solve illustration number 13. So JK Limited manufacture NXC by mixing 3 raw material for every batch of 100 kg of NXC. 125 kg of raw material are used. See, JK Limited manufactures NXC by mixing 3 raw material. For every batch of 100 kg of NXC, 125 kgs of raw material is required. So herein, 125 kgs will be distributed first in the ratio of 50:30:20. Total input will be 125, 25 will be my normal loss and 100 will be my output. So this is what my budgeted data is. Now, in the month of April, 60 batches were prepared to produce an output of 5,600 kgs of NXC. So herein, the actual output is also given, that is 5,600 kgs. The standard and the actual production particulars for the month of April are given, wherein the mix is given, the budgeted and the actual mix is given, the price is given, and the quantity of raw material purchased is given. See herein, very important guys, the question is again very easy, but when talking about the that price variance, will be using the purchase quantity. Rest all everything is the same as what we have discussed till now. Anyone else? Yes, I don't know your name, Mr. Sir, we want to check the total adverse and favorable. See, this one is adverse, this one is adverse, and this one is favorable. So minus, minus, and plus. So 5760 plus 17280 minus 6360. You will get the final figure, that is 16680 minus. Further, herein also 16680 adverse plus 2000 favorable. So this is minus, this is plus. So 14680 will be minus, that is adverse. Malu, I think you are attending that other sessions also of the regular batch. So I'll be discussing this 13th question in that regular batch because it's going to take a bit of time and it's already 1:20. Still, you just try it on your own. If you find any sort of difficulty, then I can. So guys, this is all what about standard costing. I'll be taking the regular batch also, wherein I'll be taking 4 sessions on standard costing. So those who want the those who want to revise, or those who want me to solve few more questions, you guys can mention in these lectures, because there are 4 sessions for standard costing. And since it's a revisionary class, so I have completed it in 2 sessions only. Was not being able to discuss much of questions because I want you guys to be thorough with the concept. So I covered the concepts in detail. So thank you so much, guys, for your time and patience and for active participation in the session. I request you guys to solve all the questions what I have discussed first. That is the same questions what I have discussed in material and labor, and then fixed and variable overhead. If you are finding it difficult to solve, try to solve it again and again till the time you are perfect, and then start with the easier question, and then last you can solve few missing figure question also that are there in the study material and past practice manual. Trust me, guys, if you are thorough with the concept, you can solve any questions of standard costing. So thank you so much, guys. Take care. God bless you. I'll be discussing one more chapter, that is marginal costing. Again, a very interesting chapter and a very important chapter from examination point of view. These 2 chapters, standard costing and marginal costing, you will find the question in every attempt of minimum 8 to 10 marks. It can go till 12 marks also. So these 2 chapters are very easy. very conceptual. So try to solve as many as questions possible. Again, I'll be discussing all the concepts behind the formulas of marginal costing. So whatever the queries you have, you guys can please post. I do request you guys to post your queries, whatever you have. Thank you so much, guys. God bless you. See you guys day after tomorrow. Thank you. Admin sir? Admin sir, are you there? Admin sir, are you there? Anyways, thank you so much, guys. Take care. God bless you.